Good evening. I'm Epstein, and here we are with your SPDR ETF market wrap-up, and this wrap-up is for Tuesday, the 5th of September, 2023. So we're back from Labor Day. I saw my firm's volume, my divisions, and we probably did 2 days of last week's volume in 1 day today. So traders are coming back. That's my point, and we'll see that picking up all week long. Not everybody's back. I did a mailing this morning, and I can't believe how many came back. I'm out of the office, that automatic reply, they'll return over the weekend. So a lot of people still back. We will see what happens. If you look at Burning Man, the event there, look at how many people were still there. I'm not saying they're traders in stocks and futures, but they are too. I have good friends that have gone to that, and they blow my wealth away, I can tell you that, and these guys are smart. So everything happens one way or the other. I am concerned that we're in September, and this is traditionally a weak month. So that's going to stay with me all month long. I won't forget that. I won't forget that I look for the turn sometime in October, and I won't forget that what do we have here? We got a lot of bad things coming up. What do I mean by that? Do we have a budget agreement? I haven't seen one. I haven't even seen Congress talking to each other about it in any reasonable way. Are they going to go to the last week and again do the Band-Aids? That's what they always seem to do. Then we have the UAW workers. Aren't they threatening to go on strike? Who are they going to hit? Stellantis was the most vocal against them. I think they're the likely target, but you never know. They could go for all three. You just don't know where you're going. Now, what's that going to do? When the strike happens, do all those people file for unemployment? What does that do to the unemployment rolls? How's the markets going to look at that? We have to start building this in. What have interest rates been doing? The one thing that they've been doing, look to see if we've got any here. Don't know if I've got them right behind me. Yeah, here they are, TLT. Okay, falling. As they're falling, that means real rates are going up. Are you looking at what rates are doing? You're back up in the 10-year. It's over, 4.25 again? This is not good, all right? Rates continue to climb on you. Why? Because our Treasury is the number one culprit. Who needed to go out and get $1 trillion this quarter? So every single day, are you looking to how much they're doing? 32 billion, 60. Today, there were two of them that I saw in the morning. I didn't see the afternoons. One was 69 billion for a 3-month, and then I think 62 billion for a 6-month. We're not dealing in millions. We're dealing in billions, okay? This stuff adds up to get to your $1 trillion. But as they're putting that out there, do you think they're driving rates up or down? They're competing with the stock market and everything, and the players are saying, give me a better number. I'll put in, here's the number I'll buy them from, and they're inching it up and getting higher and higher yields. That weighs on the market. It's going to weigh on home builders. It's going to weigh on everything. So please be careful. This is one ugly month. I want to thank all of you for participating in our sale. It ended over the weekend, and wow, it was monstrous, to put it mildly. I do appreciate it. I can't believe how many of you did the right thing. You bought courses. You took advantage of that price for the ongoing research. Good move. All right. Darden, we've not covered this at all. Why am I covering it? What's held up the economy is the service sector. And suddenly, I think you realize we're leaving September. We left August, we're in September, and people start changing. The kids are back in school, the vacations come to an end. You're going to be looking at interest rates going up, fuel prices. OPEC and Russia got together. It's really the Saudis and Russia got together, and they extended their production cuts until the end of December, not October, end of December. They want to goose you at the gas pump. They're going to do it. They want to goose you for your heating oil bills, your jet fuel. That's all going to happen with this. So be ready for what's happening there. And then I said, well, if the great weather's over, and we're in the northern hemisphere, that's not to say Florida doesn't stay beautiful. Texas, parts of it, not all of it, parts of it stay very pretty. Arizona gets, once the heat's gone, it's absolutely gorgeous. And that gets pretty, but you got to finish that. We're still have, I think, 19 states in the United States under heat warning right now. In Chicago, September 5th. I think we're 91 or 92 today. Now, the good news is it all starts dropping from this point and the world changes. But so does your dining out habits. So does the need, and you can't, as it gets colder, you're going to go inside and eat. All these kids are going to be let go that are working the outside of these restaurants. Chicago's a huge cafe society up and down our Fulton Street, our Rush Street. You eat out everywhere. Well, all these people, very soon, that game's going to be over. It's already changing. The tourists won't be coming in the way they are. The restaurants start cutting back. The kids go back to colleges. I'm telling you how it all works. And the restaurant business, that's it. Now, Darden's got every brand. It's got, Olive Garden. It's got Longhorn. I think it's Capitol Grills under one of their things. They got plenty of ways. They cover the spectrum. But suddenly, this market just started letting go, and it caught my attention. When I look at the swing line here, and by the way, if you come to this chart, this is a weekly chart. I didn't give you the daily. Please pay attention there. I wanted to see what it was doing, all right? We'll get the weekly on the next chart. It's not a mistake that I did. I wanted you to see that this was it. I put it by accident. I had daily up here, and it was daily, and then I switched the chart on it, and the part stayed. I wanted to see what it had done. And this market's gone from now in the 170s, it's just fallen $20 a share. So somebody knew something, somebody suspected something. What's the trend? Clearly down. Lower highs, lower lows. You don't disagree with that. The game changed right here. For all of you that bought the outside day course, this is a continuation pattern, a big one. Market had already been coming down, and now, since that, look what the market has done. Very important to learn how to work with outside days. Now, on the rallies, where do you think Ira is looking to tell his clients, hey, this is where you hit the market? It's going to be, if you get back there in a reasonable fashion and aren't oversold, between 62.46 to 63.06. The 18-day average to the 200, you've got all that resistance. The support comes in at 59.44, the Bollinger Band, if you can get down there, and you're already in oversold territory. So another drop here, and I think you'll see the pros do some short covering. Ideally, you get out of an oversold condition, and it's something I'll be looking at. Rivian, this is a spot where Rivian's back up, did a great job of recovering. We had talked day after day. I was so hoping it would hit here and just finish it off. Once it cleared that high, it was just, again, all this big break, short covering, and I think it'll run out of steam for a bit here unless there's a piece of news, I don't know, out of earnings, something that they have. But that looks to me in an overbought condition like the market should run into some resistance. I'm not bearish. It's where I think the pros are going to take money off the table. In the gasoline fund, Labor Day's over. I think we move away from this and we got to find a heating oil fund and jet fuel and the others. This is just sideways action, and I think it's going to get boring. So don't get mad, but I'm probably going to drop this and move on to another one of these. If you have an ETF that covers heating oil nicely and jet fuel, would you send it to me? It's got to have good volume, and I'll replace that with it. Go right onto the YouTube page and do that for me. I do read them. XLF, overbought, coming back into the support here. The market is breaking down. It has been in an uptrend until today. Now it took out that low. So the market today said, I'm sort of done with this. I'm not bearish. I'm not bullish. I went neutral. In the industrial sector, now the question's what's going to be. Tomorrow we get the beige book, the Fed beige book. So we're going to see what the different sections of the country look like and are they picking up. The good news is there was some industrial pickup in the United States. There's also been some in China, by the way. Some isn't a lot, but I'll take whatever they give me because this has been such a terrible market for that. Are we going to see that transpire and go further? Today's low is 106.93. It took out the 107.01. So you ended this spat to the upside. Now it's very doubtful you're going back up to that Bollinger Band. Battleground now begins against the 18-day average, trying to figure out what to do. Be careful of Walmart. If Walmart gets back under 160.15, you'd all of a sudden have lower highs, lower low. And if you closed under 159.18 with an overbought market, you open the door up for a further decline. So I'd be very cautious on that. Boeing seems to be going nowhere here, just back and forth. I may have to get rid of it down the road. It's just a boring chart, not doing too much. Then today, the home builders got smashed, almost a 4% decline. Why? Probably interest rates. Taking a look at all that's going on right now, is it going to really change their fortunes? No. People that need homes are going to go there. They're going to buy them. They're going to work out with them the deals. We've talked about that over and over. But this could be where the market coming from these lows right here of 37, what was that, 77, 78, that $8 rally might have been enough for the market to give it up. Notice where it pulled back, the 18-day average closed under it, so the bias is down. I'd be very cautious here. This was called a vertical price rally, not a trend rally. You had started with a low under a prior low and went straight up. No way that I know to catch that. Now, the energy sector, they want you to come in and buy. They're going to say, hey, Bob, Mary, all you kids out there, we're not going to produce more oil until maybe January of next year, maybe. So this is sideways action. Buy me over the Bollinger Band. Okay. That's called horse trading. Be careful. Okay. Markets only stay over those numbers 5% of the time. But listen to what I'm saying. There is a but. And it's not B-U-T-T. What it is right here is sideways action eventually breaks out and you either latch onto the Bollinger Bands or you get an upside breakout. It's not an upside breakout for many reasons. You didn't close today at the very top of the range. You did that on Friday, out of the band. You didn't do it today. So it could be where it just latches on, starts moving it and embeds. If that's the case, I think you'll end up in the 95 area if that's the case that it does. The market is overbought. I wouldn't know to tell a client how to buy that. Why? I mean, I go by the work. The work's overbought and you're buying a Bollinger Band. It's not something I would tell them to do. In GLD, this isn't as bad as the futures, but it ain't good. And the market's got higher lows, higher highs, pulling back. Look for support, 177.63. Okay, I'm sorry, let me take that back. Yes, I said it right, 177.63. This is 176.63. That's the number you can't take out if you're going to hold the pattern of higher highs, higher lows. Would I tell a client ever to buy an overbought market? No chance. SLV, this should be the first support zone that we're attacking finally. The market had been over for about a week, the 100-week average. Markets, when they get over key numbers, they got to really run from them in order to say they're going to be important. Otherwise, they act as a number that you fall back under it to see what it's made out of. You're overbought. Why would you buy over that number? And all of a sudden now, with the action of Friday and today, you've turned the trend down, the bias up. I think the bias is up, 21.59. Yep, it is. And any close under 21.46 turns the whole thing into the bear trend tomorrow. In the copper market, you don't buy the first challenge into a 100 and 200-day average when you've been under it for almost the better part of a month. I'm sorry, that's now a resistance point, and that's all that I look at. It doesn't mean it can't go higher, but it doesn't make sense to do that. You back away the way I teach charting. Then TLT. You have been fighting all kinds of battles against this average. Haven't proven to me that you're trending up or down. We had a bear market rally when you lost a bearish embedded reading. Again, when both numbers are underneath 20, going sideways, you're embedded. You lose it when you get the number to close over that, which it did, and you can see where you're at. Next, UUP. We have the market fighting at the upper Bollinger Band, the dollar index. So as bullish as I am on the dollar, it's overbought. First challenge of the Bollinger Band. Again, I think the pros take their money off the table. And I think they'll do the flip-flop now on FXE. I wanted to see if FXE could run today. My clients know why, off a weekly chart, not daily. This has been very bearish off of that, and it hadn't hit a goal. But now that you're under this, you either just pump to the downside, or tomorrow morning when I put out the morning subscriber video, you know I'm going to tell you to do something. I'm a happy camper at this point, not upset with another $0.50 break in it. So let's see what that's going to offer us. So you put it together, you get a game plan. Now, I know that when I do all this talking, and I have a big mouth to a degree, I lose some of you because of the technical indicator lingo. I want to get you back in. Years ago, I was instrumental with Futures Magazine in putting a lot of articles together and putting different articles into areas like this, technical indicator brochures and so on. I'm dealing a long time ago. I just today got in one from one of my competitor firms that tried to do this. This is just so much better. It stands the test of time. It gives you all these ideas. It's in color. It's a PDF. It's going to print out nice and simple. How do you get it? Go to our website and sign up for it. It's free. Go to iraepstein.com under free offers. Move your cursor up to the top here and hit that. At the same time, what are you going to see? You're going to see that it's going to say to you very simply, it's going to take you right there. You'll see the icon. You'll be in it. Pick out all the different free offers you want. I'm Ira. I'll talk to you first thing in the morning with the Morning Flash Update. Have a good evening.